It has been 1 day since the Monetary Policy Committee announced an increase in both the benchmark central bank rate and the Kenya Bank's reference rate, setting the stage for pricier loans. Adelaide Changole sat down with Mbithe Mulei from Africa Alliance to establish how the news was being received by both market players and investors, and who stands to gain or lose from the decision.
The move by the central bank, was it expected in your estimation?
It was slightly higher than what people expected, but overall the sentiment was okay, it's a good thing. Let's see how it's going to support the currency. And I think just to add on to your question is, well, today we've not seen any much change on the currency. It's at 100 spot 2. Nothing much has changed at this point in time, but hopefully we'll be able to see the benefits of this on the currency in the longer term.
What are the immediate effects that we should anticipate now with this rate hike? 3% in 2 months, 1.5% in subsequent months.
If you depend on any bank loan, whether it's mortgage long term, whether you depend on overdraft facilities to run your business, whether you even use your credit card on a normal basis, or you just generally go and get liabilities, you go get loans from the banks to finance some of the things that you're doing, you'll have to think about it differently, because it's going to be very expensive for you. And then the fact that the CBK on one end is also chasing the same liquidity and trying to pull it out of the market means it'll become more expensive to get that kind of credit.
Who do you think will be the gainers of this move by the central bank?
Your blue chip counters, that's Safaricom, that's Equity Bank, that's KCB, that's East African breweries. Some of these counters are coming from EABL, for example. It was at a high of about 320. Today it's at 270. So the lower it goes and you're, for example, an individual investor, then it presents an opportunity for you to start looking at it to see how you will make money in the coming years. Then the other asset class we wanted to look at was on bonds. Bonds today, if you're an individual and you want to invest in the government, they'll probably give you a higher coupon on some of the issuances that they bring out compared to what they would have given you 6 months ago. So it becomes a good investment opportunity for you. Companies that normally come out and issue corporate debt paper, the last one was at 13.2%. So they will be forced to demand a higher price because the liquidity will not necessarily be there. So if you're an individual and you have 100,000 and you're looking for somewhere to put it, you're guaranteed of getting anything north of 13%, at least for the next 6 to 12 months.